Tell me if this has happened to you. You go to a party or a social gathering, and someone invariably starts talking about their stock investments, or where the economy is headed, and the sectors or companies to invest in. Happens all the time, doesn't it? I know. But now here's a question. How, if at all, does this kind of social interaction and transmission of ideas affect people's investment decisions? Well, that is exactly what I'm going to talk to you about today. Hello everyone, this is Professor Ikram, and today I want to tell you about a very interesting study that uses soccer matches in Israel to understand how social interactions shape our investment behavior. Now you might be wondering, what do soccer games have to do with investing? Well, think about what happens at a soccer game. Thousands of people gather in one place for several hours. Do they just talk about the game? No, they talk about all sorts of things, including their investments. And so, the researchers argue, these games create the perfect natural laboratory to study how ideas spread through social networks. In this study, the researchers studied 131,000 investment accounts in Israel over a 10-year period. They specifically looked at how people's trading behavior changed based on the number of local soccer games being played in their area. And here is what they found. First, investors were more likely to buy a particular stock if many other local investors had recently bought it. And this effect became stronger when there were more soccer games being played locally. In other words, the more opportunities people had to interact socially, the more likely they were to copy each other's investment choices. Second, and this is where it gets really interesting, this social transmission wasn't random. People were much more likely to share information about their winning investments compared to their losing ones. And the better the returns, the more likely they were to talk about them. This effect was even stronger for stocks with high volatility and potential for large gains. I mean, think about it. What makes for a more exciting conversation? A stable blue chip stock that grew 5%? Or a volatile tech stock that doubled in value? The researchers also found that this social transmission was stronger in wealthy communities and in areas where people were more similar to each other in terms of age, wealth, and religious affiliation. This suggests that we are more likely to trust and act on investment advice from people we see as similar to ourselves. Perhaps most interestingly, when investors already owned a particular stock, social interactions made them more likely to buy even more of it and hold it longer. It's as if discussing our investments with like-minded people creates an echo chamber that reinforces our existing beliefs and makes us more extreme in our positions. So, what does this all mean for you as an investor? Well, in my opinion, a couple of things. First, be aware that your investment decisions might be influenced by social factors more than you realize. So when you hear about a hot stock from friends or colleagues, ask yourself, am I buying this because of solid research or because of social pressure or excitement? Second, while social networks can be valuable sources of investment ideas, they can bias you towards riskier stocks. People love to talk about their big winners, but they're usually quiet about their losses, even small ones, which can give you a skewed picture of what successful investing looks like. Would you agree? Have you ever made an investment decision based on social interactions? How was your experience? Do let me know in the comments below. All the best in your financial journey. This is Professor Ikram. Thanks for tuning in. If you found this video useful, click the like button and subscribe to the channel. And feel free to ask any questions using the comment section. Happy learning.